Guys, thanks for joining me. Today we're going to go ahead and go over the client worksheet. This is the best way to actually conduct a financial in-home with really every single appointment that you're going to walk into. When you're a new agent, you're going to be using this form to provide more structure. As you become more experienced, it's going to help you to increase your close ratio and also to help you to find additional monies in the home, such as IULs and annuities. In my opinion, everybody should be using this form. It will be attached here to the audio, and up on the board, what I'm going to do is go over the various objections that we're overcoming as we go through the inventory sheet. I think it's best explained that way so that you can understand why we're asking the clients the questions that we are asking. So the first section is called the client information section, and here it's really important that we establish the why for the client. This is probably the most important part of everything you will do in the home, and especially of this worksheet. You're going to ask the client specifics about what they're making as far as income. The way I'm going to phrase this, and I'll use Bob and Mary for today, I'm going to say, Bob, if something happens to you tomorrow, how much income is Mary going to lose? How much income is she counting on from you? And vice versa. Mary, how much income is Bob going to lose if something happens to you? And you want to go ahead and write those numbers down in the section. And again, it's not going to be real visible here on this audio. I would encourage you to have the worksheet as we're going over this so you can take pretty detailed notes. Once you've written down their after-tax take-home, again, this is what are you counting on to live, and I don't want an inflated gross number. I want a number that they're really counting on. I'm going to look to Mary, and I'm going to say, Mary, it looks like you're bringing in about $1,500. Bob, you're bringing in about $6,000. If something happens tomorrow, Mary, it looks to me like you're going to be in trouble. I'm not sure where you can live on $1,500, let alone, the $300,000 mortgage that you do have. Can I assume, guys, that I'm here to make sure that we at least get the coverage and the mortgage protection squared away for Bob today? This is a place they're going to start talking a little bit about the situation and why you are there. Mary may say something like, absolutely, that's why you're here. We've got 3 kids. I don't know what I would do. I don't have any family. Mary may say, well, I'm not really that concerned because my father's wealthy and I know that they would take me in and take care of us. And so you're going to start to dialogue about what's important for them, how important the coverage might be for them. And this is a section you really want to listen, because if Bob says to you, I'm really most concerned if something happens to me, and then you say to Bob, okay, well, is there any concern, Bob, if something were to happen to Mary? Would you like there to be some kind of an extra benefit for you? And he tells you no, you want to move on from that. You don't want to push your agenda on your clients. You want to make sure you're actively listening and then following through with what that is. The next part of this section is where you're going to total up their income. Okay, so I'm going to, this is a place I'm going to edify. I'm going to give them kudos, and I'm going to say, look, together you guys are great. You're bringing in about $7,500. I'm assuming that you guys are pretty squared away. You just qualified for the mortgage, so I'm going to assume that you don't have a lot of excessive debt. And this is a place when, again, they don't know you well yet. They want to make it appear that they're in a better situation, so they're definitely going to be excited to tell you, no, I don't have a lot of debt. Maybe they have the mortgage payment, maybe they have a car payment. So again, you want to take a minute to point that out to them, to make them feel good about that accomplishment, because what you're doing here is you're identifying premium. You're in your own way identifying how much disposable income might they have to work with. So if we look to the objections that we're overcoming in this section, we are overcoming the I can't afford it objection. I need to think about it, and maybe I'm not sure if we need it. If you do your job and you establish the why in the way that we just went over, you should not get these 3 objections. Okay, so this worksheet is all about overcoming objections before you ever get them. It's really difficult to get to the end of the inventory. Maybe you haven't done it the right way, or you haven't digged in enough, or dig deep enough, or maybe you don't even use it at all, and you get these objections. At that point, you really can't overcome them. So you want to make sure that you use this so that you can overcome them as we go. Once I feel pretty certain that I've established the why, I feel good about what that is, I feel good about where they are with their income as far as what maybe we can afford, making sure we're all on the same page, only then am I going to move to the next section. So we're going to go ahead and look at, and I'm going to call it section B, which is the mortgage info section. And if you look at that financial inventory, they're labeled that way, so it's easy to decipher. In this section, we're doing a couple of things here. And again, this is in order of importance as far as I'm concerned of how we want to overcome the larger objections first. So this sheet really provides a great order for that. So what are we doing? We're setting ourselves apart as the expert, and we're differentiating ourselves from any other competition, okay? We're also going to overcome the all or nothing objection. This is, I want the whole mortgage, or I don't want any mortgage at all. So if you look at this section, you're going to write down the mortgage balance, which you're going to find on the lead sheet. You're going to ask them, did you take a 15 or a 30-year mortgage? As you get more experience, you'll be able to figure out based on the payment, oh, it looks like a 30-year. And I'll say that, looks like you took a 30-year mortgage. And again, that just makes me look like an expert. How did she know it was a 30-year mortgage based on my premium? Well, I do this a lot. I'm pretty experienced at what I do. I see, 15, 20 families a day. Again, it's just giving you credibility. Mortgage payment, this is really important, and I'll talk about that in a second. That includes their homeowners insurance, taxes, and their principal and interest payment. The value, and the way I'll say this is, do you guys, when you bought the home, did it appraise higher than what you bought it for, than what the loan was for? Did you just refinance? If they just refinance, they're likely going to have some equity, okay? That means if they go to sell the property, they're going to pay off the loan and they're going to have some money left over. That's their equity in simple terms. If they've just purchased the home, maybe there's a little bit of equity because they put a large down payment. Maybe it was a new construction and it appreciated before they closed. There's a couple of different factors there. But I'm going to write down whatever equity they think they might have. And then we're going to say, are you both on the loan? It's a yes or no question. So I'm going to spend a little time here in this section because, again, it's really critical, especially when we're dealing with people who maybe aren't going to be healthy enough to afford or be able to qualify for the traditional mortgage protection term products that we offer. Might be somebody older who can't, afford the entire mortgage. Maybe it doesn't make sense for them. They want something more permanent. So I'm going to set the stage really early on and let them know, guys, we are always interested in taking care of the whole mortgage for you. That's always the end goal. Sometimes it's just not feasible. You may not want to pay for that. This is really going to be about where your budget is. You may not qualify, and we're going to get into that in just a minute. What I want you to understand, though, is that we can do anything from a couple years of payment protection to the entire mortgage. So at the least, we want to make sure this $100,000 of equity that you're thinking that you have, and it sounds like we're pretty close on that number, is going to go to your family and not back to the bank in foreclosure. Does that make sense, Bob and Mary, that if we can give you guys a year or two to sell the home, not in a flash sale, and give you time, that you could then keep that equity or it will go to your family versus it going back to the lender in foreclosure? And absolutely every time it makes sense. That's their hard-earned money. They've paid down that mortgage. They don't want that money going back to the lender. The other question that's super important here is, are you both on the loan? Really straightforward. So let's say Mary says, no, I'm not on the loan. Mary, are you at least on the title to the property? If she says yes, I'm going to give them kudos for that. I'm going to say, great, you guys are halfway there. Good thing is, if God forbid something happened to Bob tomorrow, Mary, you have the rights to sell the home. You're on the title. You don't have to wait for it to go through probate. Bad news, Mary, is if you don't have the mortgage covered and you don't have a lender that's willing to work with you, you could lose the home in foreclosure. And we don't want you to be in that situation where you're at the lender's discretion on whether or not they want to help you. We want to make sure you can have as much of that mortgage covered as possible. Does that make sense to you guys? Usually it does. If Mary says, no, I'm not on the loan and I'm not on the title either, Mary, guys, this is really serious. Your homework this week, you need to go to the local title company or the attorney that closed you or refinanced you. We need to make sure that you do what we call a quit claim deed, QUIT claim deed. You need to make sure, Mary, that you are at least on the title to the property. If you're not on the title to the property, you don't even have the rights to sell the home until it goes through probate. So, and again, this is just kind of like a shock factor. It's real, it's a scare tactic, but it should be. A lot of the clients don't understand this process, so the way that you're setting yourself apart as an expert here is something that no other agent is going to do unless they're with us doing this client worksheet the way we're doing it. So I'm going to skip down. There's one other question here that's super important is, are you doing anything aggressive at this point, aggressively to pay off the mortgage early? If they say yes, you know, we're putting $200 or $300 a month down on the principal, I'm going to say something like, you know, I'm not sure if you guys are aware, but a lot of people, what we're finding with our clients is a lot of people are starting to reallocate some of those funds that they were giving to the lender, because the lender, you know, I'm guessing your interest rate's super low, like maybe 3%. And they're going to say something like 3 or 4%. And so essentially what you're doing is you're giving all your money to the lender, and then they're able to take that money and reinvest it. And the only way you're going to benefit is if you ever go to sell the home. So there are vehicles, and I'm hoping that we'll be able to show you that, where you can basically get the protection that you need in the death benefit for the worst case scenario. But at the end, we can structure it so that you can get your money back a little early and prepay your mortgage 5 or 10 years early. Is that something that might be of interest to you? Usually it's a no-brainer. Everybody gets really excited about it. It sounds like a great strategy. It opens up the door as well for some potential with IUL monies also, especially if they're putting larger lump sums down on that principal. And I'm going to leave it there. I'm going to go on to the next section. This section is on the medical information. So it's, for this purpose, we're calling it Section C, medical info. I'm not sure I would call this an objection. We're basically trying to overcome any decline issues that may come up. So if you don't put the client in the right product the first time and they get declined, you lose credibility. The client may not want to try another carrier with you. They may not want to go through the motions and meet again. They may not want to try a final expense product when you promise them a term product. So it's really important here in this section that you ask them about their medications. The way I say it is, you know, if you guys have any major medical issues, like have you ever had a heart attack, stroke, cancer, anything like that, any kind of debilitating arthritis, like rheumatoid arthritis is a knockout for any term product. Anything like stents placed in your heart, anything like that. A lot of times people may not have had a heart attack and they had a stent placed, and that's still going to be a decline for a term. And when they tell you, no, we're good, or they just list a couple different medications, I'm going to take it a step further, and I'm going to say, you know, any anxiety medications, sleep medications, any narcotics for pain that you might have forgotten about over the last year, any PTSD diagnosis where, you know, even if you're not taking the medication, they might have prescribed it for you. This is so important because there are so many occasions where we will get declines because somebody forgot to tell us about a medication. So take the time here. This is the one area I would say get familiar with your guides. Definitely have them with you in the home. If you don't know, call the carrier. That's going to be the best place. A lot of agents do know the answers to those things, but if you can't reach somebody, you just call the carrier and they'll be able to do a quick risk assessment for you. Then, of course, you're going to go through those regular questions on the application, but the medication question is the most important. So the next section is Section D on current life insurance. What we're going to do here is, there's a few different things. We're overcoming the I have work coverage, right, or I have life insurance objection. It's going to help us find annuity, IUL, and med sup opportunity. And a little bit of a way that I spin it is we reposition retirement funds to increase our legacy without premium. Okay, this is a huge way that I position myself to write annuities. So the way I'm going to ask this question, starting with the work coverage. I'm going to say, Bob and Mary, do either one of you guys have any straight life insurance outside of work? Anything at work? Okay, so when they tell me I've got something at work, I might have $50,000. I'm going to say, okay, well, it's great that you have it. It's a bonus. I don't really want to factor it into our picture here. It's going to buy Mary about 3/4 of a year to a year of income replacement. It's good that you have it. Again, definitely not enough. Are we on the same page? And they're going to agree usually. Anything that you guys have, again, straight life insurance that you own, that's not through your job. The reason I'm saying straight life insurance is, again, I want to overcome the objection of, oh, I already have life insurance. Well, you have term life insurance, likely. What we're looking at is truly mortgage protection. I want to differentiate between the two so that it doesn't become an obstacle when we go to write the HMS or the Term Express return of premium product. If they have outside life insurance, that's their policy, I'm going to ask them to go get it. I'm going to say, it would really help if you could go grab those policies. It really factors into the overall picture here today. Some of them, 50%, are going to go get those policies. If somebody says, no, I don't know where it is, or it's in the safe deposit box at the bank, or whatever their excuse is, I'm not really going to push a whole lot at this point, because it means one of two things. Either they don't really trust me yet, they think I'm fishing, they maybe don't have the strong why. They may not want to waste their time, in their opinion, and go up and get it, right? The other thing is they just may not have it. So I don't want that to become an obstacle for somebody to say, well, we really need to figure out what we have first, and then we'll have you come back, because you're never going to get back in the door. I'd say 10% of the time you'll get back in the door. So if they say, I have a policy, I don't know where it is, okay, what do you guys think you have, Bob and Mary? How much coverage do you think you have? Well, I think I've got $150,000. When is that going to expire? Oh, it doesn't ever expire. It goes till I'm 85. Well, what I meant to say is, it maybe not expire, but when is your premium going to quadruple and go through the roof to the point, where you can't hold the policy? Then it gets them thinking. Then when they don't know the answer, I'll say, look, if there's any way you guys can find the policy, it's going to take me a couple minutes here to draw up some numbers. I recommend you go find it, because I'm here. I'd say 9 out of 10 times when I do this quick review, people do not have the coverage they think they have. In fact, I came across somebody who thought he had an extra 12 years on his policy, and he had 2 left. So it's really important, if you can do it in that way, not push too hard, but come back to it. There's another chance they're going to go ahead and get that policy after you cover those parts. The other question, again, talking about finding annuity, IUL, and MedSup opportunity, is, do you have anything that acts like life insurance? Do you have anything like old IRA, 401, CDs, anything in the market right now? And if somebody seems a little reluctant to give me an answer to that, I'm going to go so farther. I'm going to say, the reason I ask is sometimes we're able to help you reposition some of those funds to increase the legacy of your family instantly, in a lot of cases by about 12%, without giving you any kind of an additional premium, or maybe allowing you to get by with a little bit less mortgage protection because you've got a little bit of an increase to your legacy. Does that make sense? And again, when they hear something like that, like I'm trying to do a service, it's a unique approach, they're going to tell me, okay, well, yeah, I've got $100,000 in an old IRA, or I have 4 miscellaneous smaller IRAs from different employment, and I don't know what to do with them. They're just sitting there. Well, if I could show you guys a way where we can actually, A, increase that legacy for you, B, make sure you could never be at risk of losing any of that money in the market, and C, give you amazing growth potential still, is that something that you'd be interested in looking at? Right now we're seeing close, anywhere from 6 to 8%. Everybody is interested at that point. I'd say when I pose it that way, I might have 20% of people say no, they've got an advisor and they're just not going to go there, and that's okay. I'm going to move away from it. I'm not going to push it. If somebody says, yes, I'm interested, absolutely, I'm going to illustrate it in the home. Now, when you're newer, you're not going to be able to do that, and that's okay. You're just going to say, great, I'm not going to spend too much time there. Before I leave, we're going to get a statement. or at least we'll understand what you have and how much you have, and we'll go ahead and run it through our investment department. And then I'd like to come back in a few days and we'll go over that illustration. So you always want to book an appointment when you're in the home. You don't want to say, I'll call you back on it. You want to have a scheduled appointment within about 2 or 3 days of when you're going to leave their home to go over any annuity opportunity. Likewise, if somebody says they don't have any retirement, this is really important as well, because you're able to have a conversation with them about how we can maybe help them with some tax-free retirement, which is an indexed universal life, or why the return of premium option on the term is going to be so important to them, because at least they're not throwing out their hard-earned money to bet on if they're going to pass away in the term. The way we're going to spin that is, you guys have an ability to have this death benefit, worst case scenario. I'm banking on you're going to be here. It's going to be a living benefit for you, and you are going to get all of this money back tax-free at the end of the term that you select. That money becomes part of your retirement pool, or you can prepay your mortgage early. And they just love it. It's the value. So if you're doing MedSup, it's another question added there, because if they've got a current MedSup policy, you can ask them, maybe you can compete with what they have. So the next section is basically the section where we're going to present our options, so protection options. Before I present any options, I've started adding this in probably, maybe within the last 6 months, because there's a lot of competition in a lot of areas. I probably have 6 or 7 different agents from other companies running against me in my market. So I want to be really clear to go over everything so that if somebody comes in behind me, they're not able to poke holes in what I've done. So I'm going to tell my client, I'm going to go ahead, we're going to run some numbers here in a minute, but what I really want you to understand is the way that we work, the way that we prefer to work for your protection is we write non-medical products only. That means we don't do blood, urine, we don't dig through all your medical records, because I promise you, when you're over the age of 50, the insurance companies are going to find something. Maybe your cholesterol's off and you don't know about it. Maybe your blood pressure goes up that morning. Then it goes on your Permanent Medical Information Bureau. We call that the MIB. And once that happens, we can't go backwards and go non-medical unless that condition is under control. Sometimes that takes 6 months. Sometimes it takes a year. And sometimes it's something that you can't go backwards on if the insurance company finds out that you have cancer or there's something you don't know about. So we always want to make sure we acquire non-medical coverage first. We ask you medical questions and they do a quick prescription check, just verifying what we're saying is accurate. So I do that education before I even go over the numbers. Because now when that other agent, or if that other agent even gets in the door at this point, which a lot of times they don't, when you're this thorough with your presentation, if they do get in the door and they show them that fully underwritten portfolio, my client has a signal or a red flag go up to say, no, she told us about that, we don't want to go that route, and we're going to stick with what we have. So it eliminates chargebacks. It also helps you to identify, a client that really sees the value of what you're doing, or maybe somebody who just is looking for that cheap Band-Aid. And there's a place for that as well. You can lower down to a 15-year if you have to. But usually we want to present the full return of premium if we can. So after I've gone through that, I'm going to go ahead and run my scenario. So I'm going to say to the client, Bob and Mary, this is where it gets boring for you guys. It takes me a few minutes. I'm going to go ahead and run some options for you, and then we're going to go over them. So if you need to get a drink of water, go to the restroom, feel free to do that, because I want to set a boundary. You want to be in and out of the home within about an hour. If you're newer, it might take you an hour and 20, hour and a half, but your goal should be 45 minutes to an hour for mortgage protection. If you can set the boundary, that will occur, right? If you don't set a boundary, the client will continue to talk to you, rapport build with you while you're trying to run numbers. You might make a mistake. You might quote them the wrong number. So you want to say, look, I need to take a minute. I'm going to run those numbers. I'll write down, let's say it's a straight return of premium option. I'm going to write down covering the full mortgage, 3/4 of the mortgage, and half the mortgage. In some cases, I will add in 2 years of payment protection only, especially if I know that the budget's a little bit tighter after going through that top section. And I'm just going to turn my paper around and I'm going to say, Bob and Mary, who does the budget? And I really want to hone in on that one person. If they say they do it together, that's fine. You know, we'll give them equal attention. But if one person does the budget, I'm going to direct the figures to that person. And I'm just going to read them out matter-of-factly. I write down the amount of the coverage, the monthly premium, and the return of premium amount. I actually write all of that out. If you're doing disability income, you want to write down that monthly income amount as well. And I read through them. And I also let them know, you know, we can mix and match. We don't have to have the same exact coverage for both of you. It's unique to your scenario, so whatever works best. And I let them look at the numbers, okay? I present them, and then I say to whoever the person is doing the budget, Bob or Mary, you know, what I'm looking for today is a no-brainer number. Our goal is to get you approved, make sure we can get you an offer back. That's first and foremost. Once we do that, we have 30 days to make any changes to what we're doing here today. I'm speaking about the free look period in Colorado. Every state's a little bit different. Some states it's 14 days, so be careful and know what that number is for your state. But for me, it's 30 days. So I want to say that kind of early on before they pick out a number, and I might say it again as we move on, but that's the first thing I'm going to say. So what is a no-brainer number for you guys? And I'm going to be quiet. I'm not going to talk anymore. I'm going to let them look at each other, let them look at the paper, get uncomfortable, fidget, whatever they need to do. And somebody's going to speak. If I speak first, generally, you know, I'm going to lose out, right? We've heard that before. But if you give them a minute, they're going to say something. Well, it looks like the middle option would yeah, it looks like that would be a no-brainer number. Okay, so just remember, if you decide, once we write this up, if you decide that you want to go lower or higher, we can take care of that. It's just a quick phone call. Can we agree that we're both comfortable moving forward with the middle option? Yes? Perfect. What I'm going to need from you, because I'm going to go ahead and put this in electronically, we should have an instant approval. We're going to go ahead and get any medications that we had talked about, your driver's license, and then we also do need to collect routing account information. Once you're approved, the carrier, Americo, let's just use an example, we'll draft that premium upon approval. And then if we need to change the draft date after that, moving on into subsequent months, we can do that. But we want to give them permission to pull that first premium immediately to get your coverage in force. Again, I'm just going through the process. I'm taking control of that part so that the client doesn't try to push out their payment a month, making sure the client's fully committed, because this is a section as well where if they're not, they're going to say, well, I'm not going to give you my routing account information, or I don't want to pull the premium for another month or two. And then you know that there's something else you need to go back in and hone in on. If I have a client that at that point they say to me, well, I still think we need to think about it. You know, we don't do anything on the spot. We need to think about it overnight. I'm going to say, Bob and Mary, you know, what are we thinking about, guys? You know, is it the concept? Because I know that you need this. We talked about it early on. We've been talking about it, you know, throughout the appointment. So I'm pretty certain it's not the concept. And likely it's not. Is it the product? Do you like the idea of getting all your money back? I mean, most people, you know, it's a no-brainer for most people, but is it important for you guys? Does it make sense? Do I need to do a better job explaining the product? Usually it's not. They're on board. Is it the price? Are we just fine-tuning our budget? And a lot of times it comes down to that budget. So I'm going to take a step back and say, okay, you know, no problem. We're dealing with new budgets all the time. Most of my clients are in a new home or they've refinanced and they're adjusting to a new budget. We understand that. So today is really just about getting you approved. So if we need to take your coverage down a notch, let's go ahead and do that, because we don't want to leave you without anything, right? And we don't want to leave you, even though you've got some income replacement, we don't want to leave the burden of this mortgage and then looking at the rest of Mary's life without this additional coverage. We can't turn back the clock. What we can do is put something in place and then we can build on it. And a lot of times they'll come back around and we'll be able to write them. If they're still not comfortable, then I'm going to move on. You don't want to push somebody too hard. If you've really done your job and you've gone through this inventory the way that we just went over, you're going to find that a lot of these common objections you're getting that we've gone over are going to be completely eliminated. so that the only one you might get at the end is, we need to think about it. We don't make any decisions on the spot. If you're finding that you're getting a common objection at the end, it means you're not hitting one of the sections deep enough, right? So I would encourage you to listen to this training. I've had, many agents just, they listen to them over and over and over. It seems a little bit overwhelming in the beginning. So just integrate one thing at a time. If you're a new agent, just use the form to create some structure. Again, I promise you it's going to set you apart from that other new agent that's going in there fumbling or going through some kind of a flip chart that makes no sense to the client. This is a unique perspective that you're offering the client on their unique situation. So make sure you treat it as that. They're not a one-size-fits-all. It's not generic. A lot of people will say things like, well, I thought this is just life insurance. I thought mortgage protection just pays off the loan. Yeah, it is. All mortgage protection goes through a life vehicle, right? We all, that's a given. But what we can do differently with these products is give you your money back, add disability income for you. We have critical illness riders and other options that straight life products don't offer. So again, that's just another way that you can differentiate mortgage protection from that straight life insurance, and the other agent out there in the field isn't going to be spinning it that way. So I'm hoping that that provides a lot of detail. There's some audio recordings as well on this, but I'm going to go ahead and finish up there. Again, the inventory sheet will be attached to this video. If anybody has any questions for me, I'm always accessible via email, and certainly the office has that, so I will leave it at that, and I appreciate you guys joining me.